Hi, I'm Joy at Joy Phoebe Omuka, a licensed financial broker with Experior Financial Group. In this series, I will be unpacking information around life insurance, the different types, their benefits and setbacks, and much more. So you want to hit the plus button, subscribe, and turn on your notification. That way you don't miss out on any of my subsequent videos. So let's get into the first part of this series. What is life insurance, you may wonder? Life insurance is a contract in which the insurer, that is the insurance company, in exchange for a premium, guarantees payments to an insured beneficiaries when the insured person dies. There are four key parties to life insurance contract. Number one is the insurer. Number two is the policy owner. Number three is the life insured. And number four is beneficiary designation. Okay, now I'm going to explain each of these for you real quick. The first one, which is the insurer. Okay, who is the insurer? The insurer is the insurance company, the one that pays the death benefits to the beneficiary of the policy or of the contract. All right, and the ones that receives the premium on a monthly basis or on an annual basis, depending on how the contract is structured. Number two, which is the policy owner. The policy owner is the owner of the policy, the one that pays for the policy, and also the ones that have the right to name and designate beneficiary. And the third party to the insurance contract is the life insured. The life insured is the individual on whose life the policy was taken, or on whose life the contract was taken. Okay, now sometimes the policy owner and the life insured may be the same, but in some instances the policy owner and the life insured may be different. For example, where parents take policy contract or insurance contract on the life of their children, the children are the life insured and the parents are the policy owner, and vice versa, because children can also take life insurance contract on the lives of their parents. In that case, the children are the policy owner while the parents are the life insured. All right. However, when you are taking policy on another person, you have to establish that you have insurable interest in the life of that individual. And then that takes me to the number four party to insurance contract, which is beneficiary designation. Beneficiary designation can be of two types: revocable and irrevocable beneficiary. Revocable beneficiary is the beneficiary that can be changed at any time by the policy owner without consulting the beneficiary. In other words, the policy owner can change the beneficiary at any time. However, if the beneficiary designation is an irrevocable beneficiary, in that case, the policy owner cannot change the beneficiary without the approval of the beneficiary. So bear in mind of the two different types of beneficiary whenever you are choosing. And if you already have an existing policy, please look into what you have to be sure that you have revocable or irrevocable. There are different types of life insurance contract. There are term insurance, there's whole life, universal life, and also IRP, which stands for Insured Retirement Plan. In part 2, I'm going to be diving deeper into term insurance. So you want to follow for more. Thank you very much.